Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is a daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. An immediate countering bullish engulfing pattern on Friday that seemingly has finally broken up free of the late July to date bear channel that recently been running this market. The move up not only had the highest close since late August, but also the first clear close over the declining medium moving average, currently 97.93. That's since early July. Interestingly, the base of the action was where the upper bear channel line, currently at 94.03, intersected with the old head and shoulders neckline from October to November 2021 move, currently at 94.27. This now brings back up the two upper bear channel line ideas, the two upper bear channel lines ideas, I should say, something I've often repeated. See, there seem to be maybe two patterns here, two possible bear channels in operation. They clearly both had the same lower bear channel line, currently at 76.88, originating from early August, but with two separate and distinct upper bear channel lines. One from the end of July, which has just about been breached, and one from March last year, currently at 104.50. I'd previously looked at the more recent end of July to date one as possibly having more relevance. However, it might now be time to look at this higher one as well. The issue is that overhead we have a congestion band between 101.55 and 103.35, which has lurking within it the ever so slowly rising long moving average, currently 103.24. So far today, a lower open, but an attempt to establish the market back up over the medium moving average, though not as yet pushing higher really than last Friday's high. Spot gold. A weekly key reversal up here last week, mainly caused by last Thursday's dip and last Friday's reactionary bullish opening long white Mariposa and bullish engulfing pattern. The market moved and closed above the broken upper time, currently at 16.50 of the early March to mid-April bearish shift pitchfork, as well as the March 2021 low at 16.76, finishing right on the declining short-medium moving average, currently at 16.79. The base of the action was interestingly the middle time, currently 16.27, of the more recent June to August bearish shift pitchfork. We now have the August low overhead at 16.84, and the the upper time, currently at 17.02 of the bearish shift pitchfork. I'd previously discussed whether the action since September and possibly since July was either a double bottom or a bearish half hesitation. Previously it had been too early to clearly see which is which. However, it is looking now very much as if we have not only a double bottom since September, but a triple bottom, and we are close to seeing a move up and out of the base building of this pattern. It will very much depend on how the market behaves when it meets up with the upper time of the bearish shift pitchfork, and then the declining medium moving average overhead, currently at 17.17. Finally, this brings me once again to something I've been talking about for months. You see, there was, or is, an argument for the December 2021 today action being a possibly really big head and shoulders pattern. We've already breached the primary target where the interesting March 2021 low is at. However, we still have a harder to achieve secondary target down in the 1560 area. That was once below the bottom of my daily chart. Now it's just sitting at the lows. Now you may be wondering, those seem a little small to be targets for this size of move up and down. Well, I can explain that. You see, I used the April high at 1998 in my calculation rather than the more extreme March high at 2070. I would rather err in caution than fail in excess. Anyway, the idea of reaching a secondary target is fading away quite rapidly, and I reckon I will have to review this idea once again. Now, so far today, a higher open, but any attempt higher has been battled down, though this has not stopped the market from still trying higher. Now, thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware there is a disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.